Hi traders, welcome to the new episode of Weekly Forecast for the new trading week starting on 8th of April. In this coming week, I do not see promising opportunities in the currency market. So I have taken a mix of stocks, currency pairs, your favorite gold, and one instrument from the crypto market. So without wasting much of time, let's dive directly into the charts. So let's start our technical analysis, and I'm going to start from the stock market this time. So the first instrument we are going to cover is AMD, Advanced Micro Devices. Now starting from the monthly time frame. Now based on monthly time frame, if we switch on to the line chart, you can notice here that we have the formation of high and a higher high, and if we compare these two highs on a monthly time frame basis, there is no divergence on the basis of histogram, and there might be a bearish divergence coming up on the MACD line basis, but based on histogram there is no divergence. So if it develops the bearish divergence, then we may get a pullback and continuation to the upside. Coming down to the weekly chart. Now this time I've taken into consideration the bull run started from this low. So based on the low, it was formed in October 2022. Now from this low point, if you notice, we have a sequence of higher low, higher low, higher low, and higher low. Right now, if we have plotted fib extension in the upward direction, so this stock has risen to the fib extension level of 1.618, and the price level is 218. After reaching 218, it has started retracing back. It has formed a bearish cross on MACD lines, and we got the red histogram here. Now because of higher high formation on MACD lines and even on histogram, I'm confident that it is a temporary drop and it is going to rise again. So I have plotted a rising trend line connecting the low points, and if we get a deeper pullback, currently it has come back to fib extension of 100%, that is 170.59, and the next lower fib level of 0.618 is around 140. So if we get a deeper pullback, it may complete the confluence of the rising trend line retest along with the fib extension level of 0.618. So 140 is the right level to get into the buy setup of this stock. So you can enter at 140, or if you want, you can start getting into the market from the current level, but not with the full amount. So whatever amount you want to invest into the stock, you can start buying at the dips. So it will be, your average price will be from 170 to 140, so maybe 150. So if you average out, or you can wait if it reaches 140 to minimize the risk, and the next upside target would be fib extension 200%. So the price would be around $250. In precise numbers, it would be 248. So buying around 140, and the target would be 248 in the longer run. So this is from the investment perspective, not from the trading perspective. Now the next stock is Amazon. Now again, I'll start on the monthly time frame, and on the monthly time frame, it has created a V-shaped recovery. So it crashed towards the price level of 81 way back in 22. So the low was formed in 2022, and then it has risen and given a V-shaped recovery. Now it is almost to the previous high level. So what I've done, I've gone to the lower time frame, that's weekly, and I've applied fib extension again in the bullish direction. So based on fib extension level, We are right now at 100%, so it is hovering at 100% price level. Fib extension 100%, that is around 183, but there are no signs against. So I can see a slowdown in the bullish momentum, but no red flags in the bullish behavior. So you may expect, if you get a pullback, you may expect it to retrace towards the previous fib level, that's around 0.618, and the price level would be 158 to 160 if it gets into the corrective mode. Otherwise, the next extension level would be 205. So Amazon can easily continue its bull run towards 205. Currently we are at 185. Let's move down to daily time frame, and based on daily time frame, again, if I look at the price behavior, I do not see any signs against. So currently it's rising, it's creating a rising pattern here. So we have low, higher low, higher low, and higher low. So this is the important level. So it is around 165.66. So until it holds above 165, 166 mark, the next target is 205. So this is short-term plan. So I'm not suggesting Amazon for long-term investment right now. I've not checked the price chart from the long-term perspective. So only for the short run, you can have your stop loss below 165, and your immediate target would be 205. Now let's move to the next instrument. Now coming back to the currency market, Forex pairs. So I have taken Euro versus AUD. Now starting from the monthly chart, I would like to clean the chart here. And based on monthly time frame, if you notice, way back it crashed after creating a higher high, and from this level, that's around 2.015, we had a massive meltdown. So it was a massive crash way back around 2 decades ago in 2005. Now just reading the behavior, the pattern on the chart, and this is a monthly chart. So after that, we can expect, after a massive crash, we can expect, if market retraces back, it usually goes back to the favorite fib level. So I'm going to plot fib here, retracement starting from the highest connecting to the lowest, and usually market retraces back towards 61, 70 or 80% level. And if you notice, this currency pair has gone back in two-wave structure, three-wave structure rather, wave A, B and C, and it has completed the retracement exactly towards 80%, and this ABC pattern has formed bearish divergence, so which means it should continue lower, and it starts moving downwards after retracing towards 80% level. And now I can see that it has completed first bearish move, pulled back, and now it is getting ready for the next bearish move. So I'm going to mark another fib starting from the high which was formed in 2020 and connecting to this low in 2023. I'll use fib retracement one more time, connecting to the high of 2020 and moving back to the low of 2023. If you notice, it has again corrected precisely towards 50%, and from 50% we can expect the continuation of the next bearish move. And now I'm going to move to the weekly chart. Now based on weekly chart, if you notice, we got bullish divergence, low, higher low, higher low, highs, higher high, higher high, with bearish divergence coming on histogram, bearish divergence coming on MACD lines. So after bearish divergence, it is expected to continue in the bearish direction. So this was first move down in the bearish direction, bounced back, and now we can expect continuation. So I'm going to apply fib extension in the bearish direction to understand the bearish target. So I'll be starting from the high point, connecting to the first low and connecting to the lower high. So based on fib extension, the expected target is at least 0.618 followed by fib extension 100%. So these are the two target levels inside. Now I'll be using risk and reward to understand if we get into a short position at the current price and managing our risk at slightly higher level than the lower high, and first level of interest or take profit would be around 0.618, but my risk and reward would not be amazing. I'll be making just 0.9 times of my risk. So if we take it to the next fib extension level, then it is amazing. Then the risk and reward is favorable. So I'll be risking 1%, but I'll be making 2 times. So this is the plan based on higher time frame, that is daily. Now I'm removing the markings from daily time frame and switching to the lower time frame. Now based on lower time frame, we are anticipating bearish moves. So this is the higher high formation with bearish divergence and the breakup structure. Now this is your first push down, corrective wave up, and you can expect continuation in the downward direction. So this is the ultimate high which I can use as my stop loss. So I'll be just protecting my stop loss slightly higher than this level. So I'll be reducing my number of pips in the stop loss so that my risk and reward is optimized. So now if I'm targeting the same target, my reward becomes 3x. So I've reduced the number of pips in my stop loss because I've taken the recent most lower high as my stop loss level, and I'm targeting fib extension 100% as my TP. So my risk and reward improves to 3 times. Now coming to 1H, do you have any signs against? I don't think so. We have high, lower high, and lower high and lower high formation along with low and lower low. Now because of this bullish divergence expected, which is not yet complete, I'm expecting bullish divergence here, and yes, it is complete on histogram and MACD lines. So we can expect a short-term bounce and then continuation to the downside because higher time frame plan is still bearish. So I'm looking for bearish moves in Euro Aussie in the upcoming weeks. So immediately in the coming week we may get a bullish bounce, so you may take this as an opportunity to sell. So if I'm connecting a downward trend line here, give me a sec. So if I use a trend line tool and if I connect the lower highs, so we may get a push towards the trend line and then continuation in the downward direction. So this is the plan for Euro Aussie, sell on the rise. Now I'll cover one instrument from the crypto market and then finally we'll move to gold. So the instrument which I've selected from the crypto market is Avalanche versus USD, and based on the fib extension. So here we got lower low formation with bullish divergence, which is not very clear because the chart is not very old, so we do not have the full historical chart here. So this is the BUS level. So we got the higher high formation, a slight pullback, and next higher high formation. Now I can see slowdown because of the drop in the MACD histogram, but it is not a regular bearish divergence, so we can expect short-term pullback and then continuation to the next level. So right now the price is 48.6 for Avalanche based on the current market price, and based on daily chart, what I've done here, I'm turning it into a candles chart, and I've started applying Fib extension from the recent low, first cycle up. So this is my first point, second point, and third point, and we got the extension level. So it has risen to the Fib extension level of 1.618. I've also marked Fib extension on the historical bullish cycle. So I've taken from the lowest point to the first high and the higher low. So based on the bigger bullish cycle and the current bullish cycle, the magnet zones are here. So the first magnet zone is around 51 or 52, and the second magnet zone, that's duplication of Fib extension levels, is around 67 to 68, and it has dropped precisely towards Fib extension 0.618. So if it holds and it gets support at extension 0.618, and it should clear the next resistance at 100%, that's around 51.42, we can expect it to continue towards the target of 67 or 68. Worst case scenario, if it goes for deeper correction, I can expect the rebound from 34, 35, and then continuation towards 67 or 68. We can also add a falling trend line here. I've already added on the 4-hourly chart. So I've connected the high with the subsequent lower highs, and we got the falling trend line. Now based on the lower time frame chart, right now the current market price is sitting at the resistance level created by the trend line. So I'm looking for the break here. Let it break the falling trend line, let it clear the next level of horizontal resistance around 51.52, then it can clearly march towards 68. Alternatively, if you get a pullback, I'm still expecting it to continue in the bullish direction. So the plan is to buy on the dips. Moving to now 1-hourly chart. Based on 1-hourly chart, turning to the line chart, if you notice, we got lower low formation with bullish divergence. We also have a wider bullish divergence here, which adds to the confidence of buyers. It has already crossed the BOS level. After crossing BOS level, the instrument usually retraces back for the retest and then continues in the same direction. So I'm expecting a pullback. Right now we are at diagonal resistance and then continuation to the next level. So first resistance would be around 51, 52. Once it is broken, the ultimate target is 68. And now finally our favorite instrument, gold. Now moving back to the long-term cycle, that's monthly chart, I've marked multiple Fib extensions. The first one on the multi-year bullish cycle. So we got these golden lines. So the first Fib extension was at 2075, 0.618, and the price level was 2075. So 2075 is now broken, and the next extension level is at 2750. So that's way too far based on the bigger bullish cycle. If you notice, currently the price is moving up, clearly marching up with full momentum, full bullish momentum, and I do not see any signs against, because MACD lines are rising up clearly with strong momentum being seen on histogram as well. So monthly chart is clearly bullish. Now after marking the long-term Fib extension on the multi-year bullish cycle, I have marked subsequent fib extensions in the bullish direction starting from the low point of 2015. So this is the start of the next bullish cycle. So I've marked a green color fib extension connecting to the low, first high and higher low. So we got multiple fib extension levels here. It has already reached to FE 3.618 and the next target is FE 400. So the price level would be 2427 based on the first green cycle. The subsequent bullish cycle is again marked from the higher low formed here connecting to the next high and the higher low. So this one is the blue colored cycle and we have crossed FE 0.618 and the price level was 2198, or in round numbers we can say 2200, and the next extension of the blue bullish cycle is this is 61 and this is the next extension level is 2561 based on the second bullish cycle. Finally, I've marked the third extension on the recent most bull run and I can see the confluence, the multiple fib extension levels coming together. The first one was at again 2100, the second one is at 2275 which is already crossed, and now the third one is again overlapping at 2560. So 1.618 of the recent most bullish cycle is overlapping with the blue bullish cycle fib extension level and the magnet level is being formed at 2560. So the immediate next target for gold, if it continues its bull run, the first one would be 2427 and then followed by 2562. Round number we can say 2550 or 2560. Now I'm moving to the lower time frame, that's weekly, and if you notice we do not have any signs against in the bull run. I can see higher high formation on MACD histogram, I can see higher high formation of MACD lines, and the lines are clearly rising with full bullish momentum. No signs against on the weekly chart. Now moving to daily. On the daily time frame, again I cannot see any red flag, so we have higher high formation of MACD lines marching upwards without any loss of momentum. There might be completion of bearish divergence in the coming days based on histogram, which will create a pullback, and if we get a pullback, then we can expect it to correct towards 2275, 2302 followed by 2200. I've also connected a rising trend line here and I can delete this one and I'll connect a longer term rising trend line coming from the weekly chart. So here we can connect from the lowest point like this. So I can connect a long-term trend line here. So in this case, if it pulls back and if we get a deeper correction, then we can expect it to come back to 2100 or 2075 and then continue, but I don't think so that we are immediately getting a deeper pullback. And starting from this low, I've connected the new rising trend line. I'm going to mark here, and the low which was formed in October 23 and the price level was around 1800. Now I've connected a new rising trend line, and if we get an opportunity, if we get the discount in the coming days, then I can expect it to come back towards the fib level of 0.618 of the blue bullish cycle, and the price level would be around 2198 or 2200, and then it can continue in the upward direction. So right now I'm anticipating that it will develop a bearish divergence, but it has not yet started. There is a probability, but it is not visible, the bearish divergence. Moving to 4 hourly chart, I do not see any signs against. I see higher high formation on the 4 hourly chart with higher high formation on MACD histogram, higher high formation on MACD lines, and continues and it's continuing in the bullish direction. So I do not see any signs against on the lower time frame on the 4 hourly chart. And if we connect a new trend line here, again, if it falls, it should find support on the rising trend line around 2240. 2275 is also an important fib level which may serve as support, and then it can continue to the next level of 2430. Right now we are at 2329, so there is a potential of at least $100 move in the coming days. Now coming to the lowest time frame, that is 1 hourly, I do not see any signs against. No bearish divergence yet formed. So any opportunity in the coming days, any discount, any pullback should be taken as an opportunity to buy. So gold is in an amazing bull run. Multi-year bullish wave has started, so you should not plan for shorting without getting the evidence of the bearish moves. In fact, you should look for buying on the dips. So this is the plan for upcoming week. I hope my technical analysis adds some value to your trading, and I wish everyone a profitable trading week ahead. Take care and bye bye.